Hello traders, Gary Wagner here for Trending Markets. It is the first trading day of the year, Monday, January 4th, 2016, and we're looking at the Dow Jones Industrial Average with about 15 minutes left in trading, coming off of the lows that it hit today, but still down substantially, down about 350 points, 330 points in that area, 17,086, 17,087 in that area. When you consider that the low was 16,957, the high 17,405, you can see we've had a tremendous range on the day. That can be clearly illustrated when we look at this daily chart, and you can see that these lows that came in here earlier on the trading day today, and that was when it broke well below 16,000 on the Dow Jones Industrial Average. We've come off roughly, we are about 1/3 from the low, but we are still trading under dramatic pressure on the day. So traders, we have clearly broken through some major levels of support today. As I said, we're looking at the Standard & Poor's. Standard & Poor's right now is trading, as I said, at 1997. That is off about 38 points on the day. Of course, this is the E-mini with a low of 1980. So we're 17 points off of the low, the high 2043. So you can see a tremendous range on the day. Let's go ahead and look at our daily chart and look at different levels and try to ascertain what we can from this marketplace itself. It is quite clear that the sell-off that we saw overseas in China carried over into, of course, Europe, has also carried over into the United States. The equities markets, of course, are global equity markets, and they are all interconnected, there's no doubt. What are some of the different ranges that we want to look at, and where can we expect this market to go to? And that's what we're going to try to discern at this point. First of all, when we consider, I've got one fib retracement in here, and these are from about 1831 up to 2109. When we do that, we create a couple of levels, and the key level that we're looking at, and that we talked about, in fact, on Thursday, just prior to going into this long New Year's weekend, and I trust everyone had a good New Year's. I do want to wish everybody a happy and healthy and prosperous 2016, but we talked about this key level at about 2003. It represents a 38% retracement level. We certainly have broken through that, and broken through that hard. There was absolutely no support whatsoever found at this area. Now, the next real clear level comes in at around 1970. That is a 50% retracement of this move, and we didn't really touch, even the lows didn't come into that point. You can see that these lows came in roughly at around 1980. In the same way that we saw the Dow kind of firm up and really come off of those lows on the close, we're also seeing that happen in the Standard & Poor's. Of course, we've got about 5 minutes left in trading, so I wouldn't be surprised to see it really close around this area. But I believe that we still have the opportunity, once the dust settles, to have a really good trade come in on the long side. I think that the downside, we've got to see what really happens and how many days we witness this downside activity. Realize that the one thing I had hoped for, we certainly didn't see, was some sort of rally coming into December. Now, we did get a very short rally coming in through Christmas, but that was after a defined sell-off. Then, when we consider the 2 days prior to the holiday itself, we had the market trading lower. Of course, today trading dramatically lower. We do have support in this area at 1980. You can see how that matches this most recent low. But I draw your attention to, in terms of fundamentals, as to what we saw last time the Chinese markets came under really a dramatic pressure. And here's what alarms me, and that is the fact that, considering this move down was about a 2% drawdown in terms of value in U.S. equities. The Chinese markets were down by about 7%, but more importantly than that, they ceased trading. They stopped trading on the exchange, and we don't know how much further it could have gone. I don't think the reports that came out, the fundamental reports, were that bad to really warrant this kind of a move to the downside, but nonetheless, that's how traders reacted. But what I really want to pay close attention to is, this is the August meltdown here. And during the August meltdown, we had 4 strong days of selling before we found our first blip up. That was followed by a little down, a little up, and then to a higher low. This higher low was the first real signal, of course, that in fact we were looking at a scenario in which we could see higher prices, and then this market just rallied and rallied strongly and then traded within this defined trading range that we have just broken below, by the way, but this defined trading range of 2,000 on the low and 2109 on the high, although we only hit that on one occasion and on the second occasion attempt to hit that. My point is that we want to see how this market reacts. Are we going to see a continuation of selling? And I really think it's going to be contingent upon what we see overseas, or are we going to see some kind of firmness come into the market? My sense is we'll probably see higher pricing and some sort of support come into this market, whether it's tomorrow or Wednesday. And once we have confirmation that we've gotten some support and we're moving back into an upside market, we'll take a stab from the upside. In the meantime, we will remain flat. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.